The stock market is a tough crowd. It's not satisfied with redemption arcs and heartfelt apologies, it wants receipts. For Supermicro, Nasdaq, Smci, the last 18 months were less heroes comeback and more survival reality show. Regulatory alarms, an auditor walking away, delayed filings, and headline-grabbing volatility made this one of the most dramatic corporate sagas on the tape. But here's the twist, the story is shifting from, will they survive, to the harder question, can they execute? What just happened, and why traders perked up? On January 5th, Supermicro shares jumped about 5%, stabilizing in the $30, $31 area, a small but meaningful bounce after a long season of headlines that made the firm feel like an on-again, off-again romantic subplot in the markets. That rally wasn't some random pump, it followed a business update and the sense that immediate existential threats, delisting risk, missing filings, and, are they even still standing, questions, were receding. Suddenly the conversation on Wall Street went from, will they survive, to, can they deliver? Let's do a quick flashback montage. In late 2024, Supermicro's auditor, Ernst & Young, resigned amid concerns about accounting and governance, a nuclear-level corporate red flag that sent the stock reeling. Nasdaq slapped the company with non-compliance notices because of delayed filings. Lawsuits, short seller reports, and DOJ queries swirled in headlines. At one point, delisting lived in the same sentence as Supermicro in dozens of late-night market emails. It was ugly. Picture a high-wire act where the net keeps getting patched while the crowd tweets nervously. That's what investors lived through. The pivot, why January stabilization matters, but doesn't win the race. Okay, the rally to $30 matters because it signals sentiment shifting. But this is the kind of bounce that requires a microscope, it's hopeful, not holy. To change a narrative permanently, the company needs to turn that hope into shipments, margin recovery, and predictable cash flows. The market hands out big rewards only after a company proves its legs over multiple quarters. For Supermicro, that means Q2 deliveries, gross margin improvement, and fewer surprises in filings and auditor notes. What Supermicro does, a one-line elevator pitch. Supermicro designs and manufactures high-performance servers, storage, and data center solutions for enterprise IT, cloud, 5G, and edge deployments. They build modular rack-scale systems that integrate CPUs, GPUs, memory, networking, and cooling, often working closely with chipmakers like Nvidia to deliver GPU-accelerated platforms that hyperscalers and AI factories actually plug in and run. In plain words, when companies need racks full of GPUs that don't die on day 3, Supermicro is one of the firms they call. Supermicro sells the Lego sets of server rooms. A data center contractor can snap together a pre-configured, high-density rack instead of building a Frankenstein of parts in a warehouse for weeks. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Late 2025 and early 2026 brought tangible product headlines, not just PR puffery. Supermicro rolled out liquid-cooled Nvidia HGX B300 platforms, for U and 200 OCP, that are ready for high-volume shipment, designed to pack Nvidia Blackwell GPUs tightly while using less power and cooling. They also unveiled a new 6U Superblade powered by dual Intel Xeon 6900 series processors, up to 10 blades per enclosure, support for air and direct liquid cooling, 32-inch depth so it fits normal racks, and claimed massive cable and space reductions. Translation: more compute per rack, lower operational headaches, and solutions that matter to hyperscalers. That's the kind of product-level proof that helps revenue, if customers actually ship them into production. Imagine swapping a row of individually tuned sports cars for a synchronized train of 10 engines that can run longer, cooler, and with better mileage. For data centers, that's gold. Numbers first, Supermicro reported roughly $5.0 billion in revenue for Q1 FY 2026, down about 15% from the prior year period, with gross profit around $467 million, a gross margin roughly 9%, non-GAAP margin 9.5% after certain adjustments. That's a meaningful compression from the prior year's higher margin levels. Why does margin matter? Because when margins drop, every revenue dollar makes less profit. The engine still runs, but it sips more fuel. But here's the eyebrow raiser. Management guided Q2 net sales to $10 to $11 billion, and raised full-year revenue expectations to at least $36 billion, implying a potentially massive quarter-over-quarter revenue rebound if deliveries land. That sounds like a blockbuster pop in revenue, but the market wants to know, will margins follow? Or is this growth just transitory, driven by big orders that don't leave meaningful profit? Why margins collapsed? The mechanics behind the numbers. Margin compression at Supermicro looks like a perfect storm: pricing pressure, product mix shifts, higher component or logistics costs, and possibly discounts for customers or recognition of delivery timing. Add in the cost of beefing up manufacturing, tooling, and the investments required to ramp liquid-cooled systems at scale, and margin math gets ugly fast. Also, the company noted that some shipping shifts moved revenue from Q1 into Q2, which can make a quarter look worse while simply moving the problem down the calendar. If the revenue is delayed but still coming, margins could normalize, if management manages price and cost dynamics well. Supermicro's close partnership with Nvidia is a double-edged sword. On one side, shipping platforms built around Nvidia Blackwell GPUs, HGX B300, etc., put Supermicro at the center of the AI hardware boom. Bigger models need denser racks, better cooling, and platforms that staples-level procurement teams can roll out. Those platforms are increasingly being certified for hyperscalers and AI factories, and that's where growth comes from. On the other side, customer concentration and Nvidia-driven demand create exposure. If Nvidia's channeling of demand concentrates revenue into a few big customers, Supermicro becomes beholden to their purchasing patterns, and to Nvidia's go-to-market rhythm. Management acknowledged customer concentration in filings. The top customers can account for very large shares of accounts receivable and revenue, raising sensitivity to order timing and credit risk. When a small set of customers represents a large slice of receivables, payment delays or demand shifts cause outsized swings. The receivables red flag: 3 customers, big percentages. Dig into Supermicro's SEC filings and you see the concentration reality. A single customer comprised over 30% of accounts receivable at certain reporting dates, with other top customers contributing double-digit percentages, a stark reminder of credit concentration. Those figures aren't speculation, they're in the company's 10K per 10Q. Customer A was 33.4% of accounts receivable at June 30, 2025, and other customers also represented material shares. That's important because receivables are promises of cash. If one major buyer slows payments, the company's balance sheet feels it fast. Why it matters to you: concentration makes earnings lumpy. It turns what should be smooth growth into roller coaster quarters. In 2026, we are yet to see whether Smci could hit 250% upside. Note this as well. Do you want peace at heart? The next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. John 1:29. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.